Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. A wee bit of recovery is what we are seeing. The US futures have recovered. Dow futures are now less than 600 points. But yes, of course, it's a big cut that we are seeing in the markets today. Something that we'll discuss through the course of the show. Hey, Vivek.
That's right. A red-looking screen, not a pretty sight, especially given the fact that it's the broader end of the market, that's the mid-cap and the small-cap space, seeing quite a bit of a sharper cut compared to the benchmark indices. But quite a lot lined up on the show. Let's start off with the top headlines. Rising concerns over a possible US recession, a possible mid-meet Fed rate cut, and a Japan carry trade all combined to spook the equity, currency, bond, and commodity markets.
All sectoral indices in the red. Metals, auto, PSU, banks, realty among biggest losers. Mid-caps fall nearly 4%. The advanced decline ratio indicates one stock in the green for every 14 in the negative.
Nuclear software corrects nearly 15%. The company says its revenue declined 7% sequentially, while EBITDA margin and profit after tax also come under pressure.
Okay, those are the top headlines. While we've been talking about the market fall ad nauseum since morning, let's just look at some data. We've been talking about how valuations have been very punchy across the markets. And if we see the valuations across major indices and major market capitalization, for Nifty small cap, it's around 22 times right now, which compares with 15.8 times that we've seen on an average. For Nifty mid caps, it is around 33 times, which compares with an average PE of around 21.57 times that we've seen. So some of them are trading at 50 to 53% of their average valuations right now. Large caps, of course, the gap is not so much. Large caps are trading at 20.88 times. The average P is around 18 times. So that's why that bigger fall on mid caps that we are seeing right now. And the other data that I wanted to look at is the drawdowns that we've seen in times of major corrections or minor corrections as well. So the average drawdowns have been around 15% for large caps, 18% for mid caps, and 19.5% for small caps. This is between May 2010 to May 2024. But in case there are very bad drawdowns, something that we see during periods come by, like COVID, for instance, that's when large caps have fallen the least. Large cap drawdown has been 50.8%, which compares with mid caps at 54% and small caps at 58.6%. So in a market like this, we usually see that mid caps and small caps fall more than large caps, and that is something that is happening today as well.
Very, very interesting data. Thank you so much for pointing that out, especially given the fact that this actually indicates that the large caps tend to fare better. Some interesting data, when you're talking about just the last two trading sessions where we've witnessed the bunt, of the selling pressure. When you're talking about the NSE 500 index, in the last three trading sessions, which are the stocks that have lost the most? Look at Nuvama Wealth, it's down over 12%, Samvardhana Motherson and Brigade Enterprises, other stocks that are down over 10%. Now, coming to the mid-cap 100 or the mid-100 index, as the NSE calls it, Bharat Forge, BSE and Cummins, these are the stocks that have seen a bit of a sell-off. And NSE small cap index, when you're talking about the top drags, there's Birla Soft, there's Titagar Wagons and Nalco. Birla Soft, in fact, has given up over 15% in just the last 3 to 4 trading sessions. But which are the stocks that are making the moves in today's trading session? Hormaz is at the wall. Hormaz, over to you.
It's very difficult to find gainers when there is only one stock advancing for every 14 that are in the red. So we'll begin with the stocks that are in the red. There are plenty of them in today's trading session. I'll start off with BSE, and that is among the top losers on the mid-cap index. And that is also one of the major losers on the downside as we speak today. And most of these stocks are trading with losses in today's session. Paytm has given up most of the gains that it had on Friday's session as well, 6.5% there as well. GMR Airports, Kalyan Jewelers, all of them trading with losses of between 5 to 6%. The railway PSUs, they were the high-flying ones. They have been bearing the brunt in this recent sell-off as well. Most of them are down anywhere between 15 to 25% from the record high levels that they had hit mid-July. So IRFC, RVNL, IRCON, RailTel, all of them seeing sharp cuts in today's session as well, and all of them are at the lowest point of the day. A similar story is panning out for the shipbuilder stocks as well. Mazagon Dock is down 6.5%. It's been a slight recovery there, 5.5% now, but Cochin Shipyard and Garden Reach both locked in a 5% lower circuit in today's session. Some stocks doing not so well on the back of volumes in today's session. Samvardhana Motherson is one of them. At one point was down almost 12%, but still 10% lower. LIC Housing is an earnings reaction as well, 7.5% there. Arcane Chemicals and Phoenix Mills at one point was down 10%, is recovered slightly, down 5.5% now as we speak. And lastly, some of the stocks that are bucking the trend in today's session. Glenmark Life is one of them at the highest point of the day. 6% higher there. Tamil Nadu Mercantile also trading with gains, and Serra Sanitary, after the buyback that they announced, is trading with gains of around 3%. Back to you guys.
Okay, so there are some gainers, if not many, but thank you, Urmas, for joining us today with that list. It's a good time to welcome Sudeep Shah of SBI Securities for a quick technical check on the markets. Sudeep, good afternoon. Thank you so much for joining us. Well, we've seen a bit of recovery. Do you think we'll be able to maintain these levels? There could be some buying from lower levels, or we are in for a bigger fall now?
Good afternoon, Sonal and Vivek. Sonal, see what we are seeing in the last few days is that last 3-4 days we have seen the global markets also witness a sell-off, and because of that, Nifty has also fallen over 3 to 4% in the last 3 sessions. Now, post this recovery in the Nasdaq and as well as the Dow futures today in the last couple of hours, we have seen some bit of recovery from lower levels, 150 to 180 points in case of Nifty. But what we feel is that till the time 24,300, 24,400 is not substantially or it's taken out and we close above this zone, Nifty could witness selling pressure at higher levels, and a lot of things would depend on the global markets, how the Dow Jones behaves today and how the Asian markets also behave tomorrow morning. So on the downside, we feel that the first support that Nifty could test, it could be 23,800, 23,850, which is the 50-day moving average. And in case this is breached, then 23,500 could be the next level to watch out for. As of now, we are playing with a 23,800 and 24,300, 24,400 kind of range in case of Nifty. Now, if we see Bank Nifty here, the index was much more weaker in the last 5 to 6 sessions in comparison to Nifty. And going forward here for Bank Nifty, a key support zone would be 49,400, 49,600 kind of band. And the importance of this support zone is that this is the 50 DMA, and this zone has not been breached. This 50 DMA zone has not been breached decisively since February 2024. So that's why 49,400, 49,500 in case of Bank Nifty holds the real key.
Okay. Sudeep, today, given the kind of market fall, we'll refrain from asking you for any tips, but thank you so much for joining us and thank you so much for explaining the levels that we need to watch out for. Let's now slip into a short break. The management of Aeroflex Industries joins us next to discuss their Q1 numbers. Stay tuned. Welcome back to Midcap Radar. The first management on our show is Aeroflex Industries. The company reported a mixed set of Q1 numbers. Revenue growth slows down while margins saw improvement. To discuss this and more, we have Asad Daud, the Managing Director at Aeroflex Industries, who will talk to us about the numbers. Welcome to the show, Mr. Asad. First up, could you give us a sense, given the fact that right now, you've seen revenue growing at 8%. The guidance that you've given for FY25 is 20 to 25%, implying a very steep ask rate, Q2 onwards. Are you sticking to that particular guidance, or will you be trimming it down?
No, so if you see, we had a record quarter for the first year, the first quarter, wherein we had our highest ever quarterly sales, we had our highest ever EBITDA margins, and also the highest level of PAT. In terms of the growth, so the growth in this quarter has been 8%, but approximately 9% of the revenue for this quarter was impacted due to two reasons. One is due to the ongoing supply chain disruptions in the Middle East. And second was also that we received a lot of orders in the assembly department, but we were not able to ramp up our production capacity in line with the demand. And hence, these are the two reasons for that. So we are expecting this year to be in line with our expectation.
So you will be able to cover it up in the rest of the year is what you're saying, and you stick to your 20 to
Yes.
25% guidance.
Yes. Definitely.
So, Asad, I just wanted to add more and ask you more on the Middle East tensions, because most of the exporters are talking about how this is impacting their orders. They're either getting delayed or there is some freight cost issues as well. How bad is the situation? 57% of your geographical mix or revenues coming from Americas. There's the fear of recession there. We're talking about the supply chain issues as well. Do you think that is something which could impact orders and revenue activity in the rest of the financial year?
So in the first quarter, we received a lot of orders from USA and Europe, especially for the assembly business. But what has happened is because of the tensions in the Middle East and the rerouting of the vessels, and plus the increase in shipping cost, that also impacted our EBITDA margins. If it wasn't for those reasons, even our EBITDA margins would be at least 200 basis point more than what we had. But in terms of the flow of orders, we are seeing a strong order flow from both the US and the European markets. And if you see some of our international competitors also, they are also growing at a pretty significant pace. So I'm very optimistic for this year and for the upcoming years, especially for our industry.
Okay, Asad, you have quite a few commissions, capacities that are getting commissioned in August 2025. What is the kind of ramp up you've seen over there? You did mention that there were capacity constraints due to which you were not able to go ahead and supply a few orders. Which are the facilities also that are coming up H2 onwards, and is there enough demand?
So yes, we are increasing our capacity from 13.5 million meters to 16.5 million meters in this financial year. Out of that, our capacity up to 15 million meters is already being finished as of this month, and the rest of the capacity would be completed by December. We also have our metal bellows project, which will be completed by the third quarter, and the commercial production for that should start by the end of December. So all of these are in line. We also have some additional capacities that we are planning for our, for our recent acquisition that we have done. I think that would also start by the start of the next financial year.
Okay. Asad, thank you so much for joining us. The street seems to like your commentary. The stock is up 3% in a weak market. So let's see which way things go. But thank you so much for joining us today. That's the word coming in from Aeroflex. The stock is up 3% in an otherwise weak market. We'll slip into a short break. Vishnu R. Dusad from Nucleus Software Exports will join us to discuss their Q1 performance. Stay tuned. Welcome back. You're still tuned into Midcap Radar. Let's talk about Nucleus Software. The stock is down more than 14% in trade today. Reported a weak set of Q1 numbers. Both revenue and EBITDA margins came in weak. To discuss this and more, we have Vishnu R. Dusad, the co-founder and managing director of the company, joining us now. Mr. Dusad, good afternoon. Thank you so much for joining us. The revenue growth, actually, it's a decline this time around of 5.5%, which compares with 30% growth in FY24, 27% in FY23. What went wrong here? And even margins have come in at a 7-quarter low. Can you give us an idea of what the revenue growth and margins look like in FY25?
Yeah, thanks for raising this very pertinent question. We are a long-term player, and over the decades, we have been building an enterprise that would give comfort to our customers. So we do not really bother about our quarters and for that matter, our years. For example, I would like to explain you that, and through you to your viewers, that when COVID hit us, our margins hit a low of 7%. That was because we wanted to make sure that the great resignation that was going on, that doesn't affect our talent, and that is how we took some major decisions. And similar decision we have taken this quarter as well, or this year as well, where we are ensuring that we are able to both retain as well as attract the best talent.
Right, sir. So Q2 onwards, do you, number one, do you expect margins to recover from the current 7-quarter low levels? And secondly, your order book at the end of Q4 was close to 780 crore. Please confirm that figure for us. Has it degrown in this particular quarter? And going forward, you did mention that there were some repricing concerns that clients had. Have you faced any issues on that front?
Yeah, I'm reconfirming the order size, and there is no concern whatsoever on the repricing front. All our customers over the last 2 years have understood that we were offering our world-class products at ultra deep discounted prices, and we have just gone to them for making sure that we get we continue to run as a going concern, and they have appreciated that, and there is no concern whatsoever as far as our prices are concerned.
Okay, so there has been no price hike, Mr. Desai, because you did indicate that you've been raising prices earlier. That's why we wanted to understand if that has impacted any of the clients. And second, on the margins, did you give any wage hikes this time? Is that something that impacted margins for you? What is the outlook for FY25?
Yeah, we have obviously, as I mentioned, we have given a more than industry wage hike, and that is how that is one reason because of which you have noticed drop in margin from 27% to 15%, and we are confident that we will be able to recover back. In how much time, that as a policy we do not give guidance.
But will it see an improvement from Q1 levels? If you can give us a sense of that.
Certainly.
Okay, by how much? Is there any? Will it be like 100 to 200 basis points increase? Will it be better than?
I would not be able to say anything. That will be current.
And what about revenue growth? It has seen a decline this time. Will you see an improvement in the other quarters? Will it be a growth this year the way you've seen in last fiscal year?
Certainly.
Okay. Mr. Dusad, at the end of Q4, you had said that 20% of the clients with whom you have AMC contracts, it was still left to go ahead and do a repricing over there. So right now, are you saying that there was no higher repricing done with these particular clients?
Not yet in this particular quarter.
So what portion or what proportion of the AMC contracts are still left to be repriced?
Similar range, 20%.
Okay, so 20% of the total AMC contracts is still left to be repriced. What is the exact number of the order book currently, and what is the order pipeline?
Order pipeline I can talk about. We are is looking good, and we continue to have very good conversations with customers in at least 8 countries. We are quite hopeful that we will be able to report some orders in coming quarters.
Okay, all right, Mr. Desai, thank you so much for joining us today and giving us all those details. So that's the word coming in from Nucleus Software. First quarter was impacted by higher than industry wage hikes, and that is something that impacted margins as well. They expect to recoup all of it in FY25. But with that, we'll take your leave on Midcap Radar today. Stay tuned. Closing bell when we return. Markets have seen some recovery, but still it's a big cut on the major indices. Stay tuned.